Well, it is 6:01, you all, so let's get started. Welcome to Forex Basics. We do this class on every Tuesday at 6 p.m. Eastern, and it's called Forex for Beginners, and we're here to sort of fill in any gaps that anyone may need. We know that when you're first learning Forex, it's literally like learning a second language. And I'm so proud of Epic and everything that is offered in the platform. The 2-week syllabus, that 2-week syllabus, is all a lot of the educators are in that in terms of getting started with the intro to Forex. What is it? How to set up MT4 and all of those things. What I'm looking forward to is when they launch the other classes. Like Elise is going to do an advanced class. She's probably one of my favorite educators, of course, along with Damo, that I follow. There's a lot in that back office. I don't know about you guys, but I try to make, several live classes a week or watch the recordings of my favorite educators. But there's literally so much good information out there, so many educators, and they each have their own spin on how they see the market. So I'm really proud of our platform and everything that Epic offers. So there's also, so the live classes are 7 a.m. Eastern for New York. Then there's 9 p.m. Eastern for Asia. And then there's a 2 a.m. Eastern for London session. So wherever you are in the world, whatever time is most convenient for you to trade, there's a live session that you can plug into or watch the recording if that's more convenient. Then the study hall sessions. The study hall sessions are typically 7 p.m. Eastern, and all different educators will hop on and are scheduled for those study hall sessions. They're a lot more relaxed. You can ask your questions. And then there's honors classes with Tokyo Pips and honors classes also with Jojo. He's like the newest educator. I've not been able to dial into his class yet, but I've been told he teaches market maker theory, and that I heard Elise say he's really good with identifying the M's and W's, and that's how he trades. So lots of good stuff out there. Tune in when you can. So for our class, we just want to kind of fill in some of the gaps, give you a chance to come off mute, ask questions. Here's the format of the class. Normally the first 15 to 20 minutes, I'll go over a topic, something new, or maybe just important that we want to go over. And then the last half of the class will be Q&A. You come off mute and you can talk about the topic that we discussed or any other question that you have with your trades and TradingView and that sort of thing. All right, well, with that said, I will share my screen and we'll dive into the topic for today. Give my screen a chance to catch up. And we are covering, this is an intro class to Fibs. The formal term is Fibonacci. All the master traders, most of the master traders use Fibs. And I just wanted to sort of introduce it here so that you would know what it is when you see it in the live classes. When the educators are using it, you'll know how to use it for yourself and just kind of take some of the intimidation away from it. Let's talk about where it came from, how we can use it, and what it's for. Oh, and before I forget, each of these classes are recorded and placed on my YouTube channel. So if you go into the chat, there is my YouTube link. So if I go too fast or if you miss something, don't worry, I'll have this class uploaded either later tonight or first thing in the morning, and you can catch whatever you wanted to review. So we want to dive into Fibs, Fibonacci. But before we do that, let's make sure we first go over the concept of pullbacks. Another word for pullbacks is retracement. So some people say pullbacks, some say retracement. The terms are interchangeable. You can use one or the other. So here on looking at the image on the left, this is an uptrend. And I'll just start with the basics. And this is what you'll typically see with charts. The green candle is bullish, meaning price is going up, is increasing. And then the red candles are bearish. It's showing where price is decreasing or going down. So here's where the trend starts, and here's kind of where it ends. So wouldn't it be lovely if we were in a buy and price just, in one fell swoop just goes straight to our TP, and we can exit the trade, we have our money, and we're good. The reality is that happens very rarely. Normally, price takes a little journey. So let me use, normally price will start in an uptrend and we're progressing nicely. Let me get out a arrow tool. Okay, so typically in an uptrend, you'll start, price is going good, your trade is in blue, you are happy. And then what happens? This is what we call a pullback. It's a small, or it's a move in the opposite direction, but it's temporary. We're still in our uptrend. And as you can see, after these three bearish or decreasing candles, the uptrend continues for three more candles. Then what happens? We have another retracement, another pullback. This time it's two candles, price dips down, and then the uptrend continues. So this is the life of a Forex trader. The pullbacks, the retracements are just a part of the process. So looking at the notes here, pullback or retracement is a temporary move in the opposite direction of the trend. So we're in an uptrend, but along the way, price is going to keep dipping down. It's still making progress. It's still going in the direction that we want it to go, but it dips along the way. So for an uptrend, the pullback candles will show a slight downtrend. And then for a downtrend here on the right side, you'll see that price starts here and it's on its way down. And then it looks like it's going in the wrong direction. There's a small uptrend here that lasts for a few candles. Then our downtrend continues. And then the next three candles, it pulls back or it retraces before continuing the downtrend. So this, the pullback or the retracement is very important in terms of understanding what a fib is for and how we're going to use it. So showing the same images of our uptrend with the pullbacks and our downtrend with the pullbacks. So why do we want to use a fib? A fib can show us how to predict the size of the pullback. It can show you places on your chart where price is likely or could pull back to, and it can show you how to enter or re-enter a trade once that pullback is over. So let's kind of talk about this. Let's say you're in a trade. Let me get my trusty arrow again. So looking at the image on the left, let's say we're in an uptrend. Now, depending on your tolerance, everyone is happy, all smiley faces when we're seeing the bullish candles going our way. Sometimes when it comes to the pullback, this can be a freak out for some traders, especially if you're not accustomed to the pullback. What I'd like to encourage you to do is just, kind of relax a little. You don't have to exit your trade necessarily. Once we get to the technicals of the fib, hopefully it will help you kind of relax so that you'll know it's just a pullback, it's just a retracement. My trade is still safe. My analysis was still good, even though my profit is decreasing. It's just the way that price moves. So that's the goal of the class, so that we can get a little bit more comfortable with the ebb and flows of price. So even though it's in an uptrend, it's going to dip down a little bit. Even though it's in a strong downtrend, it's going to pull up a little bit. Okay. And so we're slowly making our way there. When we get to the fibs, there's actually some technical reasons that can help us determine, let us know, kind of give us some comfort that we're just in a pullback, and possibly show us how far it's going to pull back to. Now, I want to spend a little bit more time with this. You know, I can talk about one particular team member on my team. I can use her as an example because she's my first cousin and we're kind of close like sisters. But she is one of those traders where when price takes off for that uptrend, she is all smiles. As soon as she sees any sort of pullback, she is out of the trade. She has closed the trade out. She has taken her pips and she has gone home. There's nothing wrong with that. That's her style. The pullback really, really made her nervous. So if that's, there are traders who trade like that. Once you get to a pullback, sometimes you can close the trade out, not go negative at all. Wait till the pullback is over, re-enter the trade, catch all of these pips going up. When you hit this pullback, some traders will choose to exit the trade, not take the drawdown, re-enter again, and ride it up, catch those pips. When you hit a pullback, exit the trade and re-enter. So there are lots of different ways to trade. There are lots of different styles. Another trader, maybe that's trading style A. Trading style B may be enter the trade one time here at the bottom, stay in the trade the whole way through, ride through this pullback, stay in the trade through this pullback, stay in the trade through this pullback. Here's your TP and you're out. The advantage of staying in the trade is, one, you only had to pay the spread one time. So anytime you re-enter, you have to pay the broker again through that spread. So you may have to wait a few pips before you're in profit. And it just depends on your style. Trader A does not like pullbacks, so they're more comfortable getting their pips in 3 separate trades, whereas trader B has a more relaxed approach, knows it's just a pullback, can walk away from the trade, wait till it hits TP, and is not concerned about those pullbacks. So there's no right or wrong, but we're just going to give you some additional education that'll at least give you something to think about in terms of the pullback. All right, so Fibs is the nickname. The technical term is Fibonacci. And I want to give you just a quick, 1 to 2 minute history lesson. I teach algebra, I teach math. So my mind wanted to know, well, what is Fibonacci? Where did it come from? What is it actually? So skipping down to the bottom, there's a mathematician back in the 13th century, and his official name was Leonardo, but his nickname was Fibonacci. And he discovered that this series of numbers, 0, 1, 1, 2, 3, 5, 8, 13, 21, it's a series, right? So each number is the sum of the previous two. So let me show you real quick, get out my trusty arrow. So if I add 0 and 1, what do I get? I get 1. If I add 1 and 1, what do I get? 2. If I add, I think I need let's do an up arrow. We can do down, okay? Now, if I add 2 and 3, what do I get? 5, right? If you add 3 and 5, you get 8. If you add 5 and 8, you get 13. 8 and 13, you get 21. All right, so each number is a sum of the previous two. And then when you get into percentages, for those who are interested, 3 is 61.8% of 5. 3 is 38.2% of 8, and 3 is 23.6% of 13. All that to say, because you may not care about the math behind it, but these are the Fibonacci levels that we're going to apply to our Forex trading. So when you hear people talk about what Fib levels are you using, here are some of the common ones, and that math equation is how they came about. All right, so enough math. The levels are what we're going to concentrate on. All right, so how do we use it? So here are our Fib levels. Here are the most popular ones: 61.8, 38.2, and a lot of times this 50% is used as well. So let's add that in, 50%. The 23.6 is not as common. So these three here are the most common Fib levels: 61.8, 38.2, and 50%. So take a look at these three candles. Let's say we're in an uptrend. So remember, typically your green candle is your bullish candle. So we're in an uptrend, we're happy, we're catching pips. And then this third candle starts, it's bearish, and now our pullback starts, our retracement starts. If you use the Fib tool, if you pull out the Fibonacci, it's going to have our Fib levels on it. And the popular levels where price tends to pull back to are the 38.2, the 50, and the 61.8. So if you notice on this red candle, it pulled back to the 38.2. And that's how people use the Fib. So you're in an uptrend. When the pullback starts, you can use the Fib to see how big or small might this pullback be. And why is this important? Because now that you know about Fib levels, if the bearish candle falls here, let's say it's at maybe 30, 33, some people would have a tendency to close the trade and doubt their analysis and say, I'm going to lose my money. It's no longer an uptrend. I'm scared. I'm just going to close the trade out. But now that you have these technicals, why close the trade out when it could easily just come to the 38.2 and then continue your uptrend? So that's the power of the Fib, is that it can give you some confirmation that maybe you can stay in this trade, that maybe your analysis was dead on and you're not incorrect. So again, these lines with the levels with the numbers can measure the pullback. And typically price will respect one of these levels for the pullback. So 38.2, 50, or the 61.8 are the common ones that we use. Now in Epic, one of our master traders, Elise, has some additional teachings with some other levels. I'm going to keep it really basic and simple for this class. So a few more minutes and then we'll dive into TradingView and we'll do it live. But I just wanted to show you what we'll be looking at in TradingView. So in TradingView, when you go to your tools, the third one down, it says Gann and Fibonacci tools. If you click on that, you're going to come down and use Fib retracement. And that's how you actually place the Fib on your chart. So once you click on it, you're going to drag it from your low, if you're in an uptrend, up to your high point. And what you see in the box, that's going to appear on your chart. And if it's a downtrend and the pullback is going up, then you're going to drag, use the Fib from the high to the low. We're going to go over this on the chart. I just wanted to introduce it to you here in PowerPoint first. So if you notice back on this slide, see how it looks pretty clean? I want to show you the settings, because the settings are everything for a Fib. The settings, when you see a trader's chart, depending on their fib settings, it can look really busy. It can have a lot of levels, but with the settings, you can customize which levels you want to see, what color the lines are, and let's go into some more details here. So once I have my fib on my chart, I can right click and go to settings, and I'll see a window like this. It's a pretty long window, so the bottom of it I'm showing over here. Now, the first thing I want to tell you is, let me get out a arrow tool. The way that I like to do my fibs is I like to make sure that there is no background. So it gives just the lines and a really clean look. So here are the settings. And again, this is going to be saved on YouTube, so you'll have it to refer to. And then over here on the left, because the default is going to show you, it's going to have a lot of different boxes checked. But because we're interested mainly in the 38% level, the 62, and the 50, these are the check boxes that I have checked. So don't be confused when you put on your fib and it looks a little busy and there are lines all over the place. Just click on your settings, uncheck all of these additional ones because you want to start kind of nice and simple. You can always modify it and add additional levels. But as you can see, I'm interested in the 23%, the 38%, the 50, and the 62. So each of these lines corresponds to a checkbox. So you can have your fib as complicated or as simple as you want. And again, I don't have the background on, so it's going to look a lot simpler and cleaner on my chart. So before we go to TradingView, I wanted to give you just a snippet. So let's say of a chart, let's say we're in an uptrend. So here's where price started here, and here is my high. So my uptrend started here, and then it went all the way up to here. So let's say that this last blue part of the uptrend, let's say I didn't see that. Let's say I started here and I was in a lot of profit, and then price started to pull back. What I could do to sort of predict how long price would be in this pullback or for how deep, I could take out my fib. I'm in an uptrend, so I'm going to start it at the bottom. I'm going to drag it all the way up to the top, right? To where the zero level matches my high. And what do you notice? The purple candles stop right at the green level, and the green level represents the 50. So in this uptrend, it pulled back to the 50%. It pulled back to the 50. And what did it do after that? Continued the uptrend. So the value is, hopefully, even as a beginner, you've identified one or two, maybe three pairs that you like to study and or trade. What you can do, Elise always talks about back testing. You can go to the chart, go into TradingView. We're about to do that now. And you can put fibs on different trends and figure out for your pair or pairs, is there a level that price always likes to retrace to? So in this case, price went back to the 50. And for this pair, I believe it's EJ, you can begin to see if there's a pattern. I think I see some questions in the chat. Would you start using the fib at the lowest wick? So Monica, I've seen it taught both ways. Some people would use the fib from body to body. Others would use it wick to wick. I think as long as you do it the same each time, you're probably okay. And I've heard Elise give some instruction that, it's not that big of a deal. No problem. All right, so now that we have some background, let's go into TradingView and let's do a couple of live examples. And then you guys come off mute and ask me whatever questions you have. So give me a second and I will share my TradingView screen. Okay, so I have one already pulled up. We are looking at EJ. So just in case, oh, thank you, Frank. Just in case anyone let me ask in the chat, is there anyone in the chat, or put a 5 in the chat if you are brand new to TradingView? Put a 5 in the chat if you are brand new to TradingView and don't really know much about the tools. Put a 5 in the chat if that's you. Okay, I can assume we're good and everyone knows how to get that set up. There's a video on my YouTube if you need help with TradingView, or if you have any team members that need help setting up their TradingView account. All right, so here we're looking at Euro JPY, EJ for short, and we're looking at it on the 4-hour. So I'm going to remove this fib and show you how to put it on there. So let's say, let me block out this part of the chart. Let's say that this part of the chart we can't see. So let me make it a little darker. Let's select it. Then right click, go to settings, and we're gonna click on background and change the opacity so that it's pretty dark. Now you can't see the candles. Okay, so let's say I'm in a buy, and here's my trusty arrow. Let's say that I enter here. And let's say I get into profit, and then I'm happy, There was a small pullback here, but I've secured all of these pips. And then what happens? Price starts dropping. Here is where you would pull out the fib. So over here on your tools, 1, 2, 3 down, Gann and Fibonacci tools, you're gonna click on it, come down to fib retracement. This is an uptrend. So I'm going to click, I'm gonna use the wicks. I'm gonna click on that bottom wick. I'm going to drag it all the way until my top line, the 0%, hits that top wick. Okay, and I can drag it to the right to make it as long, as wide, or as narrow as I want. So I'll click, and now my fib is there. So here is the pullback. Where does it stop? 50%. That's how you use the fib. So it's right at 6:29. You guys come off mute. Talk to me. Tell me what questions you have. If you want me to do some more examples, how you feeling?
What about, hi, Clive here again.
Hello. Hey there.
Your time frames, does it matter?
It's a good question. It all depends on which time frame you're trading from. So no, you can apply the fib to any time frame. So if you're scalping, then you're going to be, the 15-minute, maybe the 5-minute chart, and you can do the same thing. I tend to trade, on the hour, and I'll drop down to the 5 or 15-minute to get my entry. But yeah, you can apply the fib on all your time frames. Clyde, are you more of a intraday or a scalper, or do you do a little bit of all?
I'm like your cousin.
The pullbacks make you nervous?
I hate drawdown. I run. I
I
run.
hear you. I hear you. I hear you. I hear you.
I'm definitely stuck. I'm too impatient to the day thing. I can't sleep
Mm,
if I know I've got a trade on.
yeah.
Now I'm waking up at 2, 3 o'clock in the morning. I'll sleep with one eye open. So,
I'm
so
laughing because I can relate. I understand. I understand.
I look
Yeah.
at pullbacks as other entries. Me personally, as a
Mm,
pullback, I pull my fib, and then wherever we trace, I enter again.
how about that? That's confidence.
I'm
Thank you, Mo.
aggressive, so
Thank you for that
Yeah,
perspective.
it's
We
on
need to
Facebook.
hear
Go
that.
on there. You'll see
But
them.
how do you know when the pullback is going
Yeah.
to stop?
So you made out all right.
The
hey,
50%, the
yep.
most common on all time frames, the most common when it pulled back, the most common
Fib level.
area,
Mm-hmm.
most common fib level is 50% in 618.
There you go. There you
Nice
go.
trade.
Got it.
Yep.
Thank you.
Gotta maximize it. Come on now.
All right. We want to be like you, Mo, when we grow up. So
Be better than me.
so let me show you guys an image so I can explain what Mo was saying. 1 second. Let me go back to the PowerPoint. Here we go. Yeah, so looking at this uptrend, every time these blue arrows, what we can do, once you have identified when the pullback is over, this, let's say you entered the trade here, this could be a second entry after the pullback. This could be a third entry after the pullback. So that's what Mo's talking about. That is ultimate skill and confidence right there. So thank you for that, Mo. All right, let's go back to TradingView.
No problem.
All right, Monica, what else? What other questions you have? Anybody else? Come off mute.
So she can sit in front
I'm
and
just
watch.
not going to run anymore. I'm going to really
Stick it
put my
out.
big girl pants on. I'm going to go for it.
All right. All right. And that's the
And
importance of practicing on, you know, your one pair. Like Mo, GU is that's your baby, right? That's your pair.
That's my baby. That's what I'm married to.
And
That's
that's
right.
the
So
50% pullback, right?
there you
GU?
go.
Okay.
He knows that with confidence, so he can make those other entries because he's back tested it and he knows that GU loves that 50 level.
Yep. And that all comes with back testing and knowing your pair.
Right.
Just
Mhm.
focus on one pair and then know exactly what it does before it does it. So
Is
you
that
have
the
more
only
confidence.
one?
No, they all
no,
like she said earlier. They all have different levels that they have to
Gotcha.
retrace off. So that's when the back testing comes in handy. You do your
Okay.
back testing and then you pull your fibs every time you see a reversal, and then it'll tell you every time. It tells you what level it likes to reverse off of. So next time
Gotcha.
you get there, you have confidence to pull the trigger.
Okay. Got it. Thank you.
You're welcome.
Mhm.
How y'all doing, family?
We're doing good. Who's that? Is that Pitman?
Hit
Yes,
man.
yes, yes.
Awesome.
So
Awesome. How are you?
I'm blessed. I missed the first half. I was picking up my son. I just wanted to put in my 2 cents with these fibs because the fibs is how I get a lot of my entries. I love fibs.
Ooh,
So
talk to us. Talk to us.
what I'm on my way home now. So if I make it there in time, I can screen share and show you what I do. But the
Awesome.
way I have my fib set up is I have my 50 and my 618 colored red because to
Mm,
me personally, the 618 is my favorite retracement zone. So
mm,
yep.
if I see it, and if I see any type of rejection when it gets there, I'm pulling the trigger. I'm pulling the trigger and I'm gonna set my stop loss behind the 71.
ooh,
But
let's talk
so
about that.
when you're looking at it, you as soon as you see it start to move in the opposite direction of wherever that big move was, I'll go
Mhm,
ahead and throw my fib up. So if it's bullish, you'll start at the bottom. If it's a bearish move, you'll start at the top.
mhm,
But I'll
mhm.
go ahead and as soon as I see that, I'll wait and see some sort of rejection off of that 50 or that 61.8. And as soon as I see it, I'm making my entry. If you wait too late on it, a lot of times you'll miss it because that 618 is such a strong rejection zone that it might not touch it again. Like you might just get that one touch and it shows that rejection.
That's what I'm afraid of.
My entry.
You always wait until the close of the candle before you jump in.
Yes, definitely
Yes.
wait for the close of a candle because and see, for me personally, I don't always do it. As soon as I see rejection, for me, I'm making my entry. But with the close of a candle, that's very important because the last few seconds of a candle is the most volatile. So me personally, when I see rejection, I've just been doing it because, like I say, Fibs is how I get most of my entries. I see that rejection off of that 50 or that 61.8, and I'm making my entry.
And what are
But
your
you know how
favorite
many-
pairs?
My favorite pair is the SPX 500,
Oh.
GU, and I've really started picking up on Nas. But my favorites are GU and SPX 500.
Gotcha. Monica, what was your question?
I was just going to say, a lot of times when it keeps fluttering between the two and you have no idea what this candle is getting ready to do, are you going to wait until that candle finishes and closes until you make your move?
If it's fluctuating,
Yeah.
yes. If it's
Okay.
fluctuating, I'm going to let it close and I'm going to see how it reacts.
Okay.
But
got it.
Is there a way we could see an example of that right now?
Huh?
Is there? I was asking Taisha, is there a way we could see an example of that on the screen real fast?
Should I find
Possibly.
an example where it's between two levels or?
Yes. Yes.
Let's see. Real time?
It doesn't matter. As long as I can see it, I'm following along. I just want to make sure my ideology is correct in my head while we're talking.
Well, why don't I go to GU?
Yeah, that would be perfect.
Let's pull up GU.
All right.
Let's see what we see here. Come on, TradingView.
Let's see.
When in doubt.
What about that one at 6 o'clock to the left? What? That one's fine right there.
Right
yeah, right
here?
there is fine.
What, looking at that uptrend?
Yeah.
Oh,
Yes.
okay. That's a pretty deep one. Let's see.
Right. Let's see what it gives.
Fib retracement.
Mm-hmm.
Mo, do you normally do the wicks or the body?
I normally do the wicks.
All right. Let's start at the wick. Make sure I got you. Click on the wick. Drag it. Come on, TradingView. Let me escape. Try it one more time. Fib retracement.
It didn't open up for you. Oh, you got
There we
there you go.
And then I'm going to stop it up here.
Actually, stretch it all the way to the next pullback.
Oh, okay. Let me try that again.
But this one looks like it went all the way down actually before it went up again.
Yeah, it did.
Yeah.
It went all the way down. Right.
Yeah, let's
Probably because you're starting to fib a little bit too early into an old retracement.
Yeah, let me squeeze it a little bit. Get rid of these lines.
When they talk about the most recent low, most recent to when?
Where price is.
Okay.
Get rid of that one.
It's important to know market structure.
Yeah, because what I didn't get into is knowing the difference between a pullback and just a straight up reversal. So for a reversal, you do need to exit, exit stage left. But for a pullback, we can stay in that.
Gotta know your candlestick pattern.
SPX 500 right now. That's a perfect example of a fib pulling right back to the 61.8 and dropping.
Oh, perfect. Let me pull it up. There we go.
Good man, I'm testing XPS.
I
What
love it.
time frame? What time frame?
So on the 5-minute candle, 5-minute time frame.
5 minute.
And if you look at that left arm of this W that's forming.
Oh, right here. I see it. I see
right
it.
there.
Okay,
If
so
you
we
measure that, it touches the 61.8 and it immediately drops.
I'm going to take it down to the bottom, stretch
Yes,
it
ma'am.
out. Look at there. Look at there. Wow. You guys see that? That's beautiful.
Wow.
That's clean. That's clean.
It really is.
That's really clean.
Do all of them look nice like that?
Nope.
So they're not always that pretty, but I'm telling you, that 61.8 and that 50, that zone on my fibs is red because that's my kill zone.
Yep.
And 60 SPX loves the 61.8.
So where would your entry point be at?
Me, I actually took this trade and I entered as soon as it touched the 61.
As soon as it touches 61, you got right in for the sale.
Yeah, because that bullish candle, it showed rejection. It closed complete, but it showed rejection.
Right.
So I took it immediately.
Okay, got you. Okay.
What do you mean by it? It showed rejection.
It started to form a wick. You see how it closed the full candle?
Right.
It started to reject off of it, meaning it started getting bearish. It pushed down and it left a wick. It closed the full candle.
Got you.
But it showed a wick.
Got you.
You can always tell when you see that small candle. It's like a hammer.
Right. That's the start of the bearish. Right. The rejection going the back. Yep, I got it.
Oh, before yeah.
Neri, I wouldn't say so personally because it has that wick at the bottom, but that's just my personal opinion.
Oh shit.
Good stuff, y'all. Golden nuggets. GU loves the 50, SPX 500, which is an indice, likes the 61.8. That's good stuff right there.
EU loves the 618 also.
All right, good to know. Let's I'm gonna add this to the chat.
What?
Those notes we just said. So EU 61.8, SPX 500 61.8, and then GU 50.
There's a lot of money in that SPX. I see it. A lot of liquidity.
Same as US 30, no? They're all the same, no?
Promise you. And that's why I like it because it's less volatile than US 30, but it moves a lot. Like it's almost identical to US 30 in its movement.
Right. Okay.
And it's a lot friendlier
smooth.
for smaller accounts. So that's what I recommended to my personal team who wanted to trade indices but couldn't take Damo signals. Start looking at SPX because it gives you the same patterns a lot of times, but it's not as heavy on your wallet for the pip count.
Got it. Okay, that's what's up.
Learned that today, the hard way.
Yeah.
And also, to me, the XPS do not move quick like US 30.
Yeah, US 30
US 30
nervous.
US 30 shoots. Boom, 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 boom. You can't even catch.
Right.
I stick with maybe 500.
Good stuff, y'all. Good stuff. You guys see that M pattern? We talked about that. Was it last week or the week before?
Okay.
Yeah, last week.
Yep, triggered the downtrend.
I get a little bit confused with that as well, because I mean, I can clearly see that W, and I wouldn't have seen that M if you didn't show me.
Yeah, you definitely have to get an eye for that. I was that way with the Head and Shoulders. For the life of me, I just didn't see it.
And now you see them all the time, right?
Now I see them, but it's like you have to train your eye, you know? Yeah.
So that W couldn't be classed as a Head and Shoulder.
No.
Well, with the Head and
Without the
Shoulder,
last leg.
you with the head and shoulder, you're gonna have like a top peak level, and then it's gonna fall on either side for a left shoulder and a right shoulder.
Right.
Yeah. And it's hard to find one that's like really clean, and then you have the inverted one. But
there's a really clean, but that's back in the day. Never mind. That's about a month ago. But there was a really big, really clean, really obvious head and shoulders on Bitcoin, and she dropped a couple thousand pips in a day.
oh wow, let's see if we can find it. What time frame you remember?
That was on the daily. That was on the daily. I remember sending that one out to everybody. Like, bro, this is about to fall.
Hey, Sasha, is this, how you doing? Is this recorded?
It is. It is. I'll post it on my YouTube channel either late tonight or first thing in the morning.
Okay, thank you.
No worries. No worries. Man, I'm not seeing it, but
Let me go look and see if I can find a picture of it, because I screenshot it.
yeah. Any other questions while we're looking for that head and shoulders? There's a big corporate call tonight at 7.
Oh, it's at 7?
It's at 7 p.m. Eastern. Yep.
Hey, Tasha.
Uh-huh.
Move back the right to right.
Oh, I missed it.
A small one.
It's a picture every day.
Oh, I see it. I see it. Let's highlight it. So if I'm seeing the one you're seeing, let me do a down arrow. Here would be the left shoulder. Here would be the right shoulder.
Yep.
And here would be the head.
That's on the day. That is one, but that's not the one I was talking about.
Oh yeah, I'm sure you found a bigger one.
I don't mess with Bitcoin.
Yeah, I used to trade it. I haven't in a while.
I'd invest in it, but I ain't trading it.
Yeah. All right. Any other questions? Felicia, I will post the YouTube channel again. I'm going to put it in the chat.
Okay, I found it.
Awesome.
It was August it started August looks like the 8th. But nah, that might be August the 1st. August the 1st.
Okay, 1 second. To copy the link. Okay, YouTube channel posted August.
That's it right there.
Yeah.
That's it right there.
Here's the left shoulder. I saw that one before the drop too. Left shoulder area. Right shoulder area. There's a head. And look at that drop.
Wow, that's beautiful.
Yeah. Good stuff, y'all. Good stuff. Any other questions before we go? Thank you, Mo. Thank you, Pitman, and all you guys for your input.
Oh yeah, no problem.
Any other questions? We got some great leaders on the call. Savvy's on the call. She has her class. Savvy's class is on Saturdays. Mo, you and Pitman do a mindset on Sunday evenings. And then Mo, you do your markup class on Thursdays. So guys, check the impact over profit schedule.
IOP.
What is the meeting for tonight, Tosh?
It's at 7, and I think it's going to be on the Epic website, the link for it.
About the app. It's going to be a reference to the app they're going to be talking about tonight on that call.
Yep.
Oh, okay. Okay.
So they actually canceled the 7 p.m. study hall and the Asia live trading session at 9. So it's a pretty big call that they canceled that. Yeah, discover how to increase exposure for your Epic business by using little known tips and techniques on the Epic phone app. And the special guest is John Presky. Okay, and there's a Zoom ID. So everyone go into your back office because I don't want this Zoom ID on posted on the YouTube channel. All right, guys. Anything else before we go?
I guess I got to get to back testing.
Yes, we all do. That's the name of the game.
This was a great class, Tasha. Awesome.
Thank you, Savvy.
One last question.
Yeah.
How do you find, maybe this is going to be a back testing question, but how do you find the best time for movement depending on the pairs? Like, okay, let's take the GU. Is it open? Because GU, like the GU, and is it the SPX?
Yeah, so the
GU,
GU
the SPX.
SPX starts moving at 9:30.
Is that
9:30 Eastern Standard Time?
In the morning.
That's when it really
In the morning.
in the morning. That's when it really starts moving.
Yep. And then GU, obviously, you got to look at London session and New York session.
London session. Yeah, that's me. Okay.
There you go.
Hitman, since XPS is your baby, how come you're not sending out signals?
Nyree, how are you?
Good girl.
Me and Mo was just talking about this, but when I retire, I'm gonna start sending out signals. So I got one more month.
One more month. Okay.
Because at the time I don't have the time. I'm not even supposed to have my phone out when I'm at work. So I really be sneaking to get my trades in. But I'm gonna start. All
right.
Looking forward to you. Nyree, am I pronouncing your name right or is it Neri? Because Jazz says Neri.
It's Neri.
It's Neri. Okay.
Yeah.
In my mind, I've been saying it wrong all this time.
I'm taking notes, and you guys said GU at 9:30 is the best time to trade it.
I said
XPX.
that was SPX.
Oh, okay.
London.
GU is London session.
New York.
Gotcha.
Now, Monica, sometimes you're up for London. That's when Mo sends out his fire GU call. If you're up.
Yeah, I took one about a week ago, and I hit TP1, but I didn't get TP2, and I was just devastated.
Hey, you got TP1 though. That's a winning. That's a winning trade.
I did.
Technically, that was a winning trade.
Yeah.
Yep, 25th and dip.
Yep. Well, we'll wrap it up and get ready for that 7 o'clock call, and we'll see you guys next time.
Thank you.
Thank you, Tasha.
Good night, everybody.
Good night, everyone. Okay.
Good night. Thank you, Tasha.
You're welcome. You're welcome. Bye-bye.